let's first talk about Tencent for Tencent. It's amazing that they're seeming to be getting in. Of course, Tencent itself runs a very successful streaming competitor to the likes of Spotify. They have a chunk of change in Spotify as well, so it makes very much strategic sense. But they're Chinese. Is this going to be an issue for anyone in the United States?
Well, this is the big question, because the trade war is hovering over so many industries and markets and decisions right now. You can see in M&A, for example, people have been very reluctant to do cross-border deals with China. And this deal is happening at a time, with that sort of backdrop. And it's going to take some of the US's biggest stars like Taylor Swift and Drake, U2, Lady Gaga, through this deal. They will essentially end up having a bigger presence in China, because Tencent, which is China's largest social media company, will be taking these stars and promoting them in new markets. And that's part of the attraction for Vivendi, and the market's reacted well to it. The valuation looks pretty good for them, but it's a question of how that's all going to work out.
Let's talk about traditional media, that is newspapers. Apollo taking a big role here with this deal by New Media Investment to buy Gannett. Talk about Apollo's role.
So Apollo is actually lending them $1.8 billion. It's a big warning to Wall Street. Yes, so typically these sorts of loans would have been arranged by Wall Street banks, who would then distribute it to investors, maybe Apollo among them. But Apollo has just done the whole thing on their own directly. They're going to be getting 11.5% interest, which is quite juicy, especially in this market. And, this is one of the biggest loans that Apollo has done. I think it's their biggest, but it's also one of the biggest deal loans that have been arranged by a single private lending investor rather than Wall Street banks.
It's amazing how the sort of middleman Wall Street is getting cut out when it comes to syndicated bonds, when Uber just went direct to investors, and now you have syndicated loans, not even needing syndicating and just a loan directly. Talk to us about if the combined companies, because it's a tough world out there for newspapers, ever get into difficulty. How is Apollo set up for that sort of situation?
Well, listen, some of my sources were saying that Apollo putting up this investment shows that the newspaper industry is investable still. That's only true for very smart and clever people who can actually come in and make sense of that. And Apollo is exactly that. And you know that they're going to be sitting there collecting this 11.5% interest. But if things go wrong and these companies go under, guess who's going to own them? It's going to be Apollo.
So they get 11%, and then they also own a hefty portion of assets if they need.
Yeah, exactly. If it goes broke, they're not sharing it with anybody else. They're the only lender.